Well, welcome back to the Consulting Amigos, and we're doing an expert topics for micro giants again today. And we're going to focus, since we're in December here, we're going to focus a little bit on taxes, getting ready for a small. What does a small business do to get ready, and how can you do a better job at that? All three of us have run small businesses. Ed has run a big business as well. He's a CPA. He's a certified business valuation. What is that actual certification?
ABV from the ACPA.
Okay, yeah. So all of those acronyms together, that is what Ed is. John has been in business for 40 some years, I guess, and both in electronic business, big business, had his own firm with his own people designing electronic products back in the day. He's in the real estate business now. And so he's got, a lot of years of tax preparation. I have had several businesses over the last several years, and but I think most of my, in a sense, experience comes from watching the tax man work with my clients. And I'm not an expert. John's not an expert. We've just done it a lot, and Ed is not claiming to be a tax expert. And but he does have a lot of good advice, and so we thought all three of us together could come up with, the top four, five, six things that we ought to do to be thinking about getting ready for the year end. So I'm going to let you, with that, Ed, I'm going to let you kind of give us an outline, and we'll kick some of these ideas around.
Well, thank you, Ron. I think the first thing I'd like to say is that it comes down to an annual plan, a strategy for minimizing your taxes. And there's a lot of different strategies that you can put into place. There's incentives for credits on your tax return, programs that are available out there to small businesses. And you have to bring in the right people to take advantage of those. And there's also opportunities on depreciation to try to minimize your cash impacts so that you have lower taxes. But for the most part, I guess when you're down to this point in time in the end of the year, you don't have a lot of options. If you're trying to minimize your taxes, one of the things you can do is you can buy some stuff and you can take, if you're on the cash basis, and you can take those deductions this year, but they're not going to benefit you next year. So you might get some opportunity on a 1 year basis by doing that approach. And it probably is smart because you will minimize your tax this year. But down the road, you got to keep doing that to be able to keep that tax incentive going for you. So to me, it comes down to you got to have a strategy for the year, and you have to take advantage of those opportunities in the tax code to reduce your taxes. But if you wait to the last minute, just like everything else, and don't do any planning, you're not going to get full benefit on your tax return.
So I've got a naive question which used to plague me a lot. And the question is, it's more in the CPA network. Why is it at the end of the year when I've got no cash in my account, my accountant comes up and says I owe X number of $1,000s of tax, and clearly there's no money in the account? And it sounds like a simplistic question, and we all smiled a little bit, but that was early on in my business career. That was a big wake up call. Cash in the bank didn't mean profit, didn't mean loss. It was just an indicator of something. And then taxes was, so can you explain that a little bit? Because I think it's pretty important for a lot of people.
Oh yeah, I mean, throughout the year, as you make money, you have to do quarterly analysis of how much taxes that are necessary to pay off that income. Otherwise, if you don't do that at the end of the year, you're going to get a big surprise. You're going to think you're doing much better than what you really are because you're going to get this big tax bill that you didn't anticipate. Again, that makes taxes an ongoing situation. It isn't something you just deal with at the end of the year, because if you deal with it just at the end of the year, like you say, you're going to have a big negative. You could have a big negative surprise.
So what I hear you saying is, as we go through the year, every financial decision we make, we should be thinking about the tax implication of that, not whether we want it or don't want it, or whether it's a good thing to do or not. We actually have to look at the impact on our financials to this year, but also in the future years.
Well, it's a requirement by the government because both the government and the state of California, they want their money throughout the year. If you pay your tax liability at the end of the year, that's not good enough for them. They want their money. And they want you to sign up for electronic payments of these amount on a quarterly basis so that they're getting their money throughout the year. And I don't know about you, but for me, I would rather pay by check, do my quarterly analysis. I really don't want to have to sign up for these automatic payments. But in California in particular, they make it very, very hard to do business without making those payments. So in a way, it kind of helps you because you don't get the surprise at the end of the year. But on the other side of the coin, you gotta find the cash flow throughout the year to pay it. So if you're doing everything accurately, obviously, and you're making your payments throughout the year, at the end of the year, it really is no different than the rest of the year.
So it sounds like you're both saying this isn't a year-end thing at all. You know, and so maybe we're a little late with the show, huh? But I think it serves a really big purpose, especially for new businesses and young ones that have done it a time or two. If you don't know how much you're going to pay in taxes, it's because you're not keeping track of your profitability. And
Exactly.
if you're a proprietorship and you've just started up or you've been around for a couple of years, some of you out there may not have even paid taxes yet because you're just not aware of how to do it and what to do, and pretty soon that's going to come due, or you haven't made any money, or you thought you haven't made any money. But if you're taking anything out of the business at all, of course you're going to have to pay tax on that. And you're also, and here's the thing that is kind of a surprise for a lot of people, including subchapter S corporations, and that is because the profit flows through to the individual owners, you're required to pay for those taxes whether you have any money or not. So, John, there you are. Of course, I know you were you were a little tongue in cheek there because you knew the answer, but
Well, yeah.
it's just something like if you don't have the records, you're in trouble.
So I'm going to add to that and say the only way that I personally have figured this out is I've decided I want to pay a little bit in advance, which is counterculture to a lot of people, and I don't want the automatic payments, but I want to get ahead of my tax bill. I want to pay as little as I can legally. So
Mhm.
I want to take advantage of every opportunity I've got. And to be honest, the only way I know how to do that is by using a CPA who literally knows what the tax code issues are and is familiar enough with your business not to be brought in at the last minute to try to put a magic wand over it. You need to be doing it, at least on a quarterly basis, and so that you can see the effects of it.
And Ed, you had said something just before we started that I think is kind of key here, and just an important principle, and that is that even though you're a CPA, the tax environment is a moving object, and you have to be in it every day of the year in order to know what's going on. Elaborate on that a little bit.
Yeah, it's a very comprehensive a group of rules that have to be administered properly throughout the year so that you're not off the reservation. So that's very true. So you got to understand taxes or have an advisor that helps you navigate taxes throughout the year so you know where you really stand with the profitability of your business.
Yeah.
What I have found, and this is a real concern to a lot of small businesses, and that is they don't pay attention throughout the year. And at the end of the year, they do their analysis like John was saying, and then they find out they owe a lot of taxes. So what do you think they may do? They may do some stuff they shouldn't be doing. And
Yeah.
that is all of a sudden they don't start recording their revenue.
Mm.
They start trying to manipulate their numbers so that they get their liability down. Well, there's a lot of studies going on right now about the IRS, but one thing they know for sure, they've done a cost analysis and they found out the more audits that they do, they're going to bring in more money.
Mhm.
And I think there's going to be a lot more pressure on audits by the IRS for small businesses because I think there is an opportunity for people to get off the reservation to try to accomplish a short-term goal at the peril of doing something wrong. And see, to me, it just isn't worth doing that. You're putting a lot of risk on the business. And if you get audited and then you can't come up with the money, you're in big trouble. But you could get prosecuted for more than that, tax evasion. So why take the risk? You know
And
they're
the,
going to be
you know, the
auditing.
fees are pretty substantial too. You know,
Yes,
they're
they
just
are.
they're automatic, you know, so if you're sitting out there and it's been a year or 2 years since you know, paid taxes, even if it's only a few $1,000s, I mean, pretty soon those fees are going to add up because it just keeps, you know, accumulating and accumulating. So it can end up stunning a young business person who is not familiar with this. And so it's awfully important to make sure you've got good records, number one, that you look at them through the year. And number two, as both of you had said, you need to have a tax professional on your side of the table to help you get this stuff right.
Yeah, you do. And separate subject which you haven't brought up, and that's employment tax. Um, I had a very interesting dialogue with a company. This is some 20 years ago out of the Midwest. And the guy had a team of 5 or 6 people working for him and was making a lot of money, had a beautiful house, nice cars, the whole bit. Walks in one day and there are chains across his door to his business.
Yeah.
And it turned out by the time the smoke filled it out that he had chosen not to pay him his share of the employment tax for quite a length of time and had basically ignored the letters came in. He paid his other taxes, but he had chosen to, for whatever reason, not do this. And at the end of the day, um, the federal agent had complete control, seized his account, seized the business. It was this is not a game you want to play, and it's easy to play. You can easily defer it. You can easily put it off, but I would argue that it's probably the worst way of keeping some cash that you can come up with.
Yes, it is. And I'll give you another example. If that wasn't enough, that's a little closer to home. It's a business that I was actually a partner in. I chose to leave the business and kind of sell out. I could kind of see the direction it was going. It was still doing pretty well. But at the time that I left, I went to the new president, who was not really a businessman. Um, he was very skilled at certain things and very creative. They ended up getting themselves into a kind of a tight cash flow situation because of some of the decisions they had made about how they're going to grow and so forth. And they stopped paying the company employee as well as their own, I mean, the whole company's payroll taxes.
Oh
And
boy.
had said to them my last parting words, and I still I still held the note or the security on all the furniture and fixtures
Ooh,
in the building. So I wanted them to succeed, so they'd pay that note off, and I wouldn't have to, come up with the money. Um,
yeah.
but they didn't, and I said, whatever you do, it doesn't matter how tight you are, you do not pay your payroll taxes because they will come after you and it will hurt you very, very badly. And just don't do that. That is one of the few debts you cannot get rid of. If you do not pay your payroll taxes, you're in a world of hurt.
Yeah.
Well, so naturally, as you can imagine, they did exactly that. They ended up, they ran out of money. Uh, Even the partners realized they needed to go get other jobs in order to support themselves and their families. And so the business just basically collapsed. And when things started falling apart, uh, the the tax guys showed up and basically said, you owe us, I can't remember, in those days, it was a lot of money. It was like 20, 30, $40,000. And, and this is a small company, only 6 or 7 employees. And, he always looked at the bank account to see how much money was in there. And if there was money, he considered they were doing well. And if there was no money, well, they had money because they didn't pay their payroll taxes. I mean, that's 14% of you're talking about a service industry. So here's the magnitude. A service industry, hardly any expenses except for rent and a few other things. So all of the revenue, 80% of the revenue is in payroll. And of the 80% of that revenue, you're talking about what in those days, 14%, 12, 14% of their pay was not being sent to the government. So this mounts up very rapidly. If you think it's not a big deal, it can be a huge, huge deal. Well, the president ended up having to pay that personally.
Yes.
It ruined his life.
Mm-hmm.
He was never able to he went out, he got other jobs, he was making money, but he had to pay that first. It's like having a horrible student loan or something because they were charging him fees and interest and the whole thing. As far as I know, he never really paid it off. And I think he died in he's not dead, but I mean, he's in close to poverty. Meanwhile, Ron got to go pick up all the furniture and put it in his new office. And I still have a little bit of it today. And of course, I had to pay that note off, but it was minuscule compared to what he had to pay. And I had the value of the furniture, so it's like it didn't matter to me because I got furniture and fixtures for, I don't know, 20% of the original value because it had been mostly paid down. So that was a horrible situation. This man really lived a pretty bad life from that point on. So whatever you do, pay your payroll taxes. It is just not worth it.
Well said. I'd like to bring up another issue, and that is, from my experience, business owners are pretty good in doing everything they can to minimize their taxes. They learn pretty quickly how to minimize that big expense. The problem I see from time to time is that they make business decisions based on how it's going to impact their taxes rather than what's best for the business. So they'll give up on an opportunity perhaps that could really bring in a lot of money because they're so afraid of the taxes. And it's a phobia. I mean, it's like the biggest deal on their agenda, not paying tax.
Right.
And I come in with a different perspective. I said, well, it's a privilege in a way, because if you're making a lot of money and you have to pay taxes, that's a good thing, not a bad thing.
Yeah.
So that's one of the things I always look at, is trying to be a little bit more savvy on the business, looking at making decisions that are best for the business and not focusing everything based upon how it's going to impact their tax bill at the end of the year or per quarter.
Ed,
Yeah.
I don't like to say this because I'm coming back to say I think we all need to listen to our CPA and our accounting and our bookkeeping professional a little bit more than perhaps we do. But I think it is essential for anybody these days in any form of business to have a good relationship with their accounting professional and to be aware of the unintended consequences of some of the things that go on. And one of the things that back in the day when everybody was in new businesses and I was in the Midwest, people would go out at the end of the year and say, look, I've got an opportunity here. I've got this tax bill, but I'm just going to go out and buy a brand new car because I'm going to write that off and it'll be a good thing. And so I had friends who would every couple of years just go out and buy brand new cars and do this, and they thought they were really doing well. Can you address the thinking in that concept a little bit, Ed?
So that gets right back to my concept here, where they focus so much on the tax return. So they think they can go out and buy a brand new car to reduce their tax bill. and it really does nothing to benefit the business.
Right.
And so to me, that's a waste of money.
Well, it applies to even machinery that's going to be useful to the business. You know, the CPA will say, gee, you need more deductions. And he goes, oh, gee, or as we have had in the past, gee, you've got an opportunity here to spend some money and in accelerate your depreciation schedule. So instead of the $3,000 a year you can write off for, I don't know what, 12 years or whatever it might be, depending on the equipment, you're going to get to double that. Well, okay, fine, but now you're making a decision based on taxes as
Right.
opposed to making a decision based on efficiency, growth, your strategic plan. It's like, and I'm sorry, CPAs that suggest doing something like that, instead of focusing on efficiency and long-term growth, they're doing a disservice to their particular client. They don't do that intentionally. I guess they're probably duty bound, I suppose, to say, well, here's where some of the deductions are. It'd be nice if we could get some. But yeah, you guys are both right.
Unintended consequences is the thing that I think to be good as an entrepreneur, I think you got to look at the future. You're anticipating how things are going to grow out. You've got energy to do that, and so that's the positive side of creative thinking on that end. Then the other side of that is you've also got to look at these consequences that happen as a result of you doing it. And especially when we talk in a federal government and a state government and then a local government, most of us who live in cities have some taxable issues concerning the city we live in, as simple as having a business license or paying a percentage to them, which I don't think is legally required in a lot of cities, but they try to make out it is as a condition of getting a business license. I'm not sure how that all flows out, but I know it's not, in the law, so to speak. And then the state has their mandates, and then the federal government has. So you're sitting with layers of stuff that go on, and you got to have somebody who's normally not the business owner who can bring that advice in. I was on the board of directors of a company that did a lot of international and national work and had, back to the employee taxes, decided not to pay some employee taxes for several times, and it was tens of thousands of dollars. And I was a consultant to the company, and I was also acting as an employee, and I was a signature on the contracts they were signing. So I opted out a year before I left to sign nothing. I removed my name from any documents. And then ultimately I left working with the company because they had, over a period of 12 months, not mitigated their employee tax situation.
Mhm.
And at some point, there was a possibility it might come back to land on the directors of the company, which I was then termed one. So I said, no, I'm not going to do that. I can operate as an extension, but I don't want to be part of anything that comes out of it. So,
Yeah. The one of the other things too that I think we sometimes fail to consider really is the whole issue of long-term where we're going and what we should be spending our money on. And that includes pricing kinds of decisions. And sometimes a business doesn't think about the taxes that they're going to be paying as part of their total forecasting tools. And as a result, they don't build that into pricing. And the truth of the matter is, if you're going to make a lot of money, you're going to pay a lot of taxes. And if you're going to pay a lot of taxes, you need to be sure that you've got your expense and your revenue structures right so that you can pay for it. And a lot of times that's not considered, and it's sort of like everything is over and done and you made 5%. Oops, it was only 3%. You didn't plan on that. So, and in a sense, you're kind of right, Ed. It is a little bit of a privilege, and it's kind of a privilege to be successful. If you're successful, pay your taxes, and don't forget about sales tax. I've been in the retail business. I don't think. I suppose you had sales tax in the newspaper business, Ed.
Sales tax is a big issue.
Yeah.
And sales tax is administered by states. So if you're doing business in various states, you better understand the sales tax implications from those different states because it could really have a big negative impact on your business.
Oh my gosh, yes. I
And
mean, now that they're
everyone's
so
different.
so high. And you know, I can remember when everybody was squealing about it back when I lived in Colorado, squealing about going from 3 to 3.5%. Well, we're at 8.5, 9% now. This is a big, big number. And of course, if you add it on to the price of the goods, if you're in retail, then it's like, oh, well, we don't have to worry about that. And we're collecting it for the government and we have to pay to administrate that and send it off to them. So it's no big deal. But it is a big deal if you're competing on an international basis. And today, everybody's competing on a national basis, at least, you know, with online sales. And so where are you going to be paying? And I know that where you're residing has a lot to do with it now. And it is better than it, say, more equitable than it used to be when the internet was kind of in its first days. But you have to consider taxes as a normal part of your costs and do that up front.
Yeah, I just looked at a tax return the other day. It was almost 1,000 pages. And
Oh my
almost
goodness.
all the pages were related to sales tax in
Oh my
different
gosh.
states.
Unbelievable.
So, and if you don't consider it, it could put you out of business. You could get a delinquent tax bill with all kinds of penalties, and you think you're doing everything right, and you want to do everything right, but to meet the expectations of each one of these states is not an easy thing to do.
Yeah.
And you got to have a system in place that keeps track of the sales by state, which is another important thing. And then you got the whole internet issue. When you're selling things over the internet, everybody's got different ways of trying to tax that revenue.
Mm.
It makes doing business very complicated.
Yes, it does. Let's switch gears just a little bit. Before we end, I want to make sure that we can touch on this new law for reporting the Beneficial Ownership Information Act, I guess, or reporting. We raised this question, last year, just to let our micro giants know that it's going to be out there. Well, now we're here. Now December 31st is coming, and you have to do this report. Or do you? Now, Ed has been doing a little bit of work on this and has kind of come up with some information. You want to kind of abbreviate what you've discovered the current status is, because I guess this proves your point. Taxation, and in this case, even reporting, is a fluid issue. You're not really sure what you're doing because we've got government entities fighting with each other. Give us a lowdown on that, Ed.
Well, this was they want to know the ownership of LLCs, the government does. And they went through the Department of Security. What's that called, Ron?
Yes, it's the
Well, there's a FinCEN, part of the Corporate Transparency Act
that's
with
it.
the Financial Crimes Enforcement Network,
Yeah.
otherwise known as FinCEN.
Yeah,
FinCEN, that's right. So, how many people know anything about FinCEN if you're doing business?
I've
Very
been,
few,
I
right?
knew
I've been
nothing
doing
about it.
business for
That's
50
right.
years. I've never heard of it until this.
Yeah, what the organization we deal with from a business perspective is the IRS.
Yeah.
The IRS was involved in this and people got the notification from the IRS, they would understand it more effectively than what they understand about this ruling. So what I find when I'm out talking to people, most people don't even know this exists as a requirement. So that's an issue by itself, and it's a punitive
Mm,
requirement because if you don't do what they ask you to do, it could be a penalty of $500 per day.
per day.
So, that
Forget taxes. You're out of business already.
yeah, everything to try to prevent you from making money, right? So anyway, I know a lot of my clients are filing the paperwork like they should. And what I found is that the attorneys are pretty good at this because they set up the LLCs and they were really good at servicing the customers, making sure that they're complying with this. Some of the CPA firms, they know everything about it, but they don't always communicate to their clients in a timely manner. So maybe some do, some don't, I don't know. But I know the attorneys did a pretty good job because they set up the organizations, right? Well, anyway, it was contested down in Texas, and the whole thing is kind of in jello right now. Nobody knows what's going to happen, and you still don't know whether you should comply or not. And I always tell my clients you should comply. You really got nothing to lose. You have a lot to you have a lot to lose if you don't comply.
Yeah.
So basically, it's suspended. The AICPA comes out with a ruling saying, well, CPAs have to do a good job telling their customers, their clients, how this thing is going to shake out. But at this point in time, nobody knows for sure. So why not play it safe, do your filing, and you don't have to worry about it.
Yeah.
But I also found this is a big issue with a lot of people because they don't want the government knowing more about them.
So, what they've got, the list of items that are needed is full legal name, date of birth, residential address, an image of an acceptable identification document. Now, I don't use my residential address in many things anymore because I don't get any mail there. So I always use another address. And that's the address that's associated to everything from my driver's license to passport to everything else. So, I would actually not be compliant in the fullest terms of this document, even though I could meet 90% of it. So, what are you going to do?
Yeah, it's a decision you have to make, and everybody's going to make it based upon what they're.
A little differently.
That's right. From
Yeah.
my perspective, I'm always been taught to try to eliminate that risk as much as possible.
There you go.
And so that's what drives my decisions, but not everybody feels that way.
Yeah.
And I think that there are going to be people who simply don't want to be identified.
Right.
I believe, if I'm correct, I think you had to have a 20% ownership and or influence over a company in order to be listed as an influential owner. And of course, what they're trying to do is they're trying to catch people who are doing money laundering, and that's the whole point of this. Then you can argue on the other side, this is a little bit too much of a reach here. You don't need to penalize all small businesses. Now, it's one thing to require this. It's another thing to charge $500 a day for this, because the government creating punitive damages for people who don't even know they're supposed to do it. This is wrong, and the government should not do that. Fortunately, the Department of Justice has weighed in on this and basically said, and they went to the fifth, according to your notes, Ed, went to the Fifth Circuit Court seeking an injunction, and they may well get it. But it's clear that when you don't have these government entities, especially these law making and law enforcement folks saying, wait a minute, this is really a step too far, it really makes you wonder what in the world is going on and why the government would seek to be so, say, personally involved in your own little business. The interesting part here, though, that I think is that if you're a large company, you don't have to do it. It's the
That's true.
small companies that they're coming after here, as if they're assuming all the little companies are operating illegally and are being run as money laundering. Everybody's guilty until you state that you're not guilty. That is wrong.
It's counterintuitive. You would think the big companies would be included, but you're right, they're excluded.
That's right. And so what you have is, and I think it was unintentional. I just think there are a lot of people who do not think about small business. And of course, that's why we're here. We're basically saying to lawmakers and the Justice Department and all our micro giants and those people, we're basically saying, stop and think about the small business. These are people who are just trying to make a living. In the vast majority of cases, they're having issues paying their taxes, managing their business, not only having to deal with the craft and the market forces and the situation we're in economically right now, and then on top of it, you layer this punitive kind of punishment for the smallest of pieces of information, when in fact the IRS could have collected it as a matter of course
I,
in a normal tax form at the end of the year, and all you had to do is list those 3 or 4 people, and it would have been so simple. And that's the problem with this. Yet, Ed, being the conservative, risk-averse guy you are, I think your advice is right.
well,
Remove the risk and just go ahead and do this, because that way you're not going to end up with a fine.
I kind of like to end this conversation by going back to what John said, and that is making sure you're getting good advice from on the legal front and from the tax side of your business. It's really important because not knowing something, lack of knowledge, is not a defense to these risks. And you can go in and say, I didn't know anything about it, and I'm sorry and all that. Well, guess what? You could lose your business overnight because it doesn't matter. Either you follow the rules, whatever they are, or you don't. And if
Yeah.
you don't follow the rules, you got risk to your business. So it really comes right down to a lot of times small businesses doesn't like to invest in any type of advisory situations, advisory help. When you do that, you put yourself and your company at risk.
Yeah, that's a good place to end this. Thank you for that summary, Ed, and we'll be taking a little reprieve until the beginning of next year. So get your taxes all wrapped up and do all of your reporting forms, and have a great Christmas, everybody. We'll see you next year. See you.